Hi, everyone. It's great to be part of this awesome virtual event. I've just seen that the numbers are nearly 1,000 attendees. So I think this is probably history in the making for a virtual AgTech event. So it's so exciting to see our community come together in this way during such a difficult time. So by way of introduction, I'm Louisa Burwood-Taylor. I'm with AgFunder, which is a digitally native venture capital firm investing across food tech and ag tech. We use media, network effects, and technology to find and support our portfolio companies. And I head up our media and research arm, which produces daily news and views about our industry via agfundernews.com. And we also have a weekly newsletter that goes to about 70,000 subscribers globally. My team also produces periodic research, investment reports. We tally all the investment that goes into agri-food tech startups across the various categories, stages, and geographies throughout the year. And we have a footprint across the globe with staff based in North America, Asia Pacific, and Europe. But we've invested in portfolio companies on every continent, which brings me to our topic today, which is Latin America. And I'm excited to be joined today by two of the region's leading AgTech entrepreneurs, I think I would call you guys. Rodrigo La Felice de dos Santos, the CEO of SOLINFTEC, and Mariana Vasconcelos, the CEO of Agrosmart. So both of them are digital AgTech startups. How would you describe the differences? We were laughing a little bit earlier that they might be a little bit competitive with each other, but they're actually very good friends. So what can you tell us, Mariana?
Well, I will try to explain and then Rodrigo can complement. SOLINFTEC have been in the market way longer, right? So like they totally are pioneers in bringing technology to the field. And from my point of view, their expertise and their core are really focused on operational efficiency and helping farmers to manage machinery and labor on the field and doing better use of inputs, also very driven to sustainability, while Agrosmart is more oriented to the agronomic insights, like relating water, weather, more like to the seed choice and sustainability side in terms of traceability. We work across all the supply chain, like with the input companies, distributors, farmers, food companies, and banks and finance, so like really generating data and making it flow across the supply chain, working across different crops. So I think one difference as well would be I see SOLINFTEC more focused in large operations and grains and extensive agriculture like sugarcane, soybeans, and so on, while we do that too, but with smaller farms like medium farms and smallholder farms as well from the high value crops supply chain.
Is that
Rodri complete?
Yeah, what do you think? Is that a good description?
Oh, yes, it is. I mean, our DNA has always been to, well, first of all, thanks for the invitation. It's great to be here and have so many people listening to us and watching this from Latin America. It's a very specific moment in the history of humankind. So it's always great to really discuss how digital solutions can improve the lives of farmers across the globe. And I think this is an awesome opportunity to do that. I see Agrosmart as one of the few AgTech companies out of Latin America who's really delivering real value to farmers. So even though there are a few solutions that we have similar features, SOLINFTEC has always been focused in efficiency improvement, cost reduction, and different parts of the whole farming operation. We're the operational system of a farmer, as Windows will be on your computer or iOS, and then you have different features and apps that you will connect. But overall, we're actually we're way closer to being partners than competitors, to be honest.
That's nice to hear. Very diplomatic. So I'd love to hear a bit about how you both got into AgTech. Mari, it's 2014, I think, that you founded Agrosmart. Why did you build the company?
Yes, I'm daughter of farmers, so like I grew up very closely to the daily challenges in the field and how decision was made in intuitions. And I was working with technology industries outside agriculture. I didn't want to stay in the field. Like I thought it was boring. It was not for me. Like I went to the city to study. And while I was working with Internet of Things and artificial intelligence for industries, we started thinking, why not bring this to agriculture, where we know like farmers, we understand operations. And for our country, like Brazil is one of the main agriculture powerhouses. It's so important for our economy. So that's where we decided to connect the two words in 2014.
What does your family farm?
My dad farms sugar cane in the past. Now it's mostly corn and pasture. And I have a brother that is organic farmer. He does coffee and vegetables in general.
And are they pro AgTech?
Super. In the beginning, no, of course. In the beginning, they were very resistant, very traditional farmers, very opposite, organic, traditional, but both like very related to the manual work and their knowledge. But with time, they let me test stuff. Like they were my first customers, and now they advocate for Agrosmart, like in our region and their events and this kind of thing.
That's fantastic. And Rodrigo, so your background is in commodities, I think, and you joined SOLINFTEC just over a year ago now.
That's it. I come from a farming community as well. I was born in Mato Grosso, which is the equivalent of Illinois or Iowa or Indiana in the U.S., across the Corn Belt. It's the biggest producing state in Brazil for soybeans, corn, cattle, cotton, and many other ag products. I have worked in over 65 countries as a trader, supply chain manager, working with logistics, trading and whatnot, and got involved with digital ag in 2015 with a few friends in Microsoft, IBM, and Google in Brazil, who were actually asking me to try and gap the bridge or bridge the gap between tech and ag, because there was, and Mariana remembers that back in 14 and 15, a lack of experience from the people on the tech side trying to take technology to the different fields across Latin America and then across the world. And then I started mentoring and working myself, investing my own money, because I saw how disruptive digital ag was going to be in the lives of farmers. And that's something I was looking for many, many years in this 24 years career I have. To try and help not only the farming communities I come from, but farmers across the world to increase efficiency, reduce costs, improve yields, and being more sustainable as a consequence. And not because you impose on farmers that they have to be more sustainable, but because you're bringing efficiency, you make them produce more with less inputs and costs. That's how you make food production more sustainable. And I'm glad to be part of this revolution with SOLINFTEC, taking that to now over 20 million acres in 11 countries.
That's fantastic. So yeah, I was going to say you expanded to the US last year, setting up shop in Indiana. Wondering about the differences between Brazil or other parts of Latin America and the US in terms of what challenges farmers are facing. I'm sure in some ways they're facing very similar challenges, but maybe there are some distinct challenges. We'd love to hear about that.
They are very similar in many ways, but you have a structural difference. First, the agronomic market, the services market in the US is over 60% in the hands of big co-ops and retailers. That does not exist in Brazil. Even though in Brazil you have similar big groups, the Amagis, the Bonfuturos, the Raisin on the sugarcane, you don't have this kind of market structure where agronomic services are provided by few players and few stakeholders. So that's good for digital ag because you access millions and millions of acres through very few groups, and that's what we're doing. We are operating with 4 of the 5 biggest co-ops in the Corn Belt in the Midwest in 6 states already, over 3.5 million acres. But the challenges of cost reduction are very, very similar. Even though in Brazil, in Argentina, Paraguay, Peru, Colombia, there is the demand and the obligation to be efficient, while in the US, you still have a lot of help from the government because of subsidies and insurance and all that. The demand in Latin America for efficiency is a question of survival. In the US, that wave of improving efficiency has been increasing in the last year, in the last few years, which is great for us. because they need technology to make that happen. But it's way slower than it's been forever in Latin America, because here is a question of survival. If you're not competitive in the global landscape, you're dead. It's as simple as that.
Mari, what have been your experiences expanding outside of Brazil?
I believe, like comparing US and Latin America, one of the main challenges is also related to the climate. So like tropical ag is very different from temperate agriculture. And so adapting the algorithms, adapting the models so they can work out in Latin America, it's a challenge. We have seen like many AgTech teams struggle, like just coming as the models were done in the US and expecting it to work downstairs. And I think also a challenge is connectivity and infrastructure. Like while you have very well built regions with more available connectivity, not that it's not like this in the US, because the US also has challenges with connectivity, and we have seen that, but here is way worse. So like in Brazil in general, only 14% of farms have connectivity in the field, and that's why companies like Agrosmart and like SOLINFTEC had to create their own network to be able to collect data in the field, and that has been a barrier for many AgTechs entering. And I think last would be a little bit of the farmer profile. Like he said, we are very used to access knowledge and access distributed knowledge from agronomists, from groups. Many times the farmers themselves are less technified. So we see a difference. While sometimes the North American farmers prefer data, raw data, where they can analyze and they can have those big groups analyzing it for them. Our farmers prefer more consolidated knowledge and pieces where they can digest easier.
How would you say that attitude in Latin America to data and AgTech, how has that changed, and how is that impacting adoption? Like, what is the AgTech adoption rate, and are we seeing it, going up steeply, hopefully? Or
it's very fast.
It is fast now.
Like Rodrigo said, I think in the US it started earlier, and here like it took a while to start, but now it's growing faster than it is in the US. Because like one, we need it. It's a survival matter. And second, we are the largest producers and exporters of many crops in the world. Like Brazil is the largest for sugarcane, for orange juice, for coffee, for chicken meat. So it's a need of remaining competitive and positioning ourselves as a powerhouse. So I think like they saw the opportunity of not only improving efficiency, reducing costs, or bringing sustainability, but also to export more value.
I mean, one of the things that we do see in the US, we have seen, is some fatigue with new AgTech startups coming along, offering the next best thing. And farmers that over here were very willing to do some trials in the early days, probably when the tech was too early, have now been a little bit burned by investing time in it. It's not had the results they wanted. So I'm not sure if that's necessarily impacted demand or appetite, but it's definitely made them more wary. Do you see that happening in Latin America? Or do you think maybe because the technology is that bit more developed, it's actually a better situation?
It's a combination of a few factors. First of all, the very bad experience that many farmers had across the globe with precision ag back in 2004, 2005, when the first precision ag solutions came up and did not deliver any value whatsoever. That created a barrier. Because there is a myth, and that's a global myth, that farmers are reluctant to adopt technology. That's a lie. That's probably one of the best sectors in the world where farmers invest the most in technology, if the technology delivers value. So you see, in our case, in the 13 years history we have with the company, we've only grown more and more, doubled the company, tripled the company year over year. So it is a lie that they do not like or they do not invest in technology. They invest in technologies that deliver value, either reduce cost and improve efficiency or increase yields. Farmers are very simple people. If you don't increase yields or reduce costs, get out of the farm, go do something else. Because if you don't show real value for farmers, they will not pay for it. So there is a combination of factors with the story of precision ag, then digital agriculture in the past 10 years showing many solutions that do not deliver value in practice. That's also part of the smoke, as we say, that doesn't help the sector. So now we're seeing, and to be honest with you, I'm very glad that this pandemic and the whole thing going on is actually filtering what's real and putting it apart. So you now you can see, if you go to farmers or you go to big groups, you will see the real solutions that are being used and the ones that are left behind. So there is this real value delivery that's a game changer for everyone in our space.
I agree. I think we had a lot of disappointments in the precision ag generation, and many times also because we were importing technology and then they arrived without translation, without technical support, and farmers were left there to learn by themselves, and they didn't. And then it's not that the technology doesn't offer value, it's that they didn't train the farmers to extract value from the technology. And that's what I meant about the profile of expecting it to be delivered, the value, not waiting for the farmer to extract themselves. And I agree with Rodri. I think we grew a lot in Latin America in numbers of startups. So it does generate like a overwhelming feeling in the farmers where they don't know how to react and they don't know what to test anymore. So like really understanding the customer journey and not overwhelming them with all of the solutions and promising long-term strategies. We in Agrosmart, like we beat a lot on the journey of the digital transformation. We cannot promise farmers that they will sit and will see a TV and everything will be autonomous and they will know what's the best seed variety and what they have to do in each moment of the season, because that's not true in day one. It can be true, but there is a journey to get there. You need to get the data, you need to change the behavior, because even if you deliver the insight, there is an operational challenge for changing the labor and the machinery and so on, so you can arrive there. And not promising that in day one, I think it's very important.
And how would you characterize the AgTech ecosystem then in Latin America? You said that it's grown fast and there's a lot more startups. What kind of support do startups have today? I mean, probably, I'm guessing it's very different from when you started out in terms of the number of investors or incubators or accelerators and so on.
Yes, I think like when we started, there was no ecosystem, no investors or no one. Like I think there was SOLINFTEC was there, and Nauta was there, AgroTools, and then I think Strider, and then we were probably the next. So there was no ecosystem. So I'm really glad to see that we came together and we are learning together as a region, as Latin America, to position ourselves in our power in agriculture to supply chain, not only waiting for external solutions to come, but actually creating our own and exporting them. So I'm happy to see universities, investors, corporations, farmers coming together in Mato Grosso. Rodrigo can talk a little bit more, but they have a great initiative where they raised farmers' problems and are directing startups to create solutions to tackle that. So I think I would say today, like the value of AgTech Valley in Piracicaba is very similar to the ecosystem in Salinas, which I am part in the US, for example.
I agree. I mean, it's been crazy. The past 5 years have changed completely the landscape of the ecosystem in Brazil and across Latin America. I was listening to the founder of Mercado Libre this morning. We're part of the Endeavor network globally. And I was laughing because he was describing how it was back in 2000 when the internet bubble exploded. And then in 2008, during the Lehman Brothers problem and the crisis, when they IPO'd Mercado Libre in NASDAQ. And it's very similar to what AgTech, in a way, has been going through in the past 5-6 years in Latin America. There was no one to talk to. There was no peer. There was no, not even competitors. So it was funny. You had to create the standard on your own, not talking to VCs or to funds or PEs or even clients. I mean, no one was really ready to tell you, listen, this is the pattern. This is the path you should go down. Or these are the alternatives. So it's way harder when there is no ecosystem available for you to find the right paths and make the right decisions. We as entrepreneurs, we end up eventually screwing up and making bad decisions. But reality is the ecosystem today is way more mature. You have many VCs, both local and international, that have established themselves across the region. You have many farmers from different crops adopting solutions, and that's a game changer as well because it helps the maturity of the ecosystem. And above all, you have different stakeholders from society. So machine producers, input producers, consumers, food producers, all getting involved in the ecosystem somehow. And that, again, speeds up the adoption and the maturity of the solutions that are offered to the clients.
So thinking about that government support you mentioned, is that government support for startups and innovation or a different type of government support?
Even that you're seeing right now. I mean, the government in Brazil or in Argentina and Paraguay, you have different initiatives from the different governments supporting innovation and startups from the different sectors, including AgTech, because It's all a succession of factors, right? When I started back in '96, the biggest concern in trading and supply chain was food security and food safety. I think you guys have heard that year in, year out for the past years. It's still the same concern. The thing is that now, especially with COVID coming up, this food safety and security will become a problem because protectionism will increase, as everyone is saying. So countries will be more careful about what's really, really important to feed their population. So all the supply chains will have to go through a re-examine, and technology is a must. Take a look at what's going on with Amazon, with Rappi in Latin America, that's delivering millions of packages every day. With Magalu, it's the equivalent of Amazon in Brazil. So the digitalization, technology, considering everything that's going on for the past 25 years I'm mentioning, will become a demand, not only a demand, but mandatory to help supply chains be more efficient and keep on feeding the growing population.
And we have a question from Brandon Kuhn here in the audience asking, are there any local government initiatives regarding building out infrastructure? I presume he means, around connectivity and internet.
Yes.
Well, there is from the government, sorry, Mari, we have a private initiative as well in Brazil, which we call Conectar Agro. We've partnered up with 6 other companies from the ag space and telecommunications, taking connectivity basically to rural areas. As Mari said, very few regions across Brazil have connectivity. We had to create our own connectivity solution, proprietary, back in 2012, so we could deliver tech solutions to farmers across Brazil. But the government does have 2 initiatives in that direction. We've spoken to the Ministry of Agriculture. She's increasing the budget for that in the coming years. But again, it's not as much as it should be, but it's already a start. Mari, sorry.
Yes, no, I think there is a formalization of government support in AgTech. Rodri said in the past, we had already some programs for startups, but now for innovation in agriculture, it's a secretary within the Ministry of Agriculture, and they create a committee for Agriculture 4.0 that includes initiatives in connectivity and are bringing together different discussions to see how government can support. We in Latin America learned very early not to wait for government. And that's why what Rodrigo says is very important. We never counted on government for waiting for things to happen. We just do stuff. So I think the private sector has been investing in it for a while. So you see Sigfox invested in Brazil, creating networks in Mato Grosso, in Uberlândia, and so on. Also in Colombia, they have a good network. Many companies are bringing and expanding, he said. We also work with Team for Narrowband IoT and LoRa and different protocols. So we see an increase. It's not enough, and it's far from being enough. And like I said, not even in the US is enough.
Yeah.
It's funny, Louisa, just to complement what Mari said, we learned very early on in our careers, not only as entrepreneurs, but as citizens, if the government doesn't bother you, that's already a victory in Latin America. Just pray that they don't get in your way. That's already
yeah, right. So thinking about some of that private sector support you've had then, can you tell us a bit about your investors?
Yes.
Rodrigo, you obviously have a fantastic investor with AgFunder, but what about some of your other investors?
Well, we do. We're invested by TPG as well, Texas Pacific Group. They were our first investors, and right after AgFunder joined us as well in our cap table. We're very happy with that. TPG has been an immense support, both as investors and as board members. It's one of the biggest private equity groups in the world, and we're invested out of their Alternative Renewable Technologies Fund. So it's very aligned with our values and principles of creating sustainable agriculture, making food production more accessible, efficient, and sustainable. And last December, we brought on board the Trajano family through Unbox Capital. Trajano family is the biggest shareholder of Magalu, which is the equivalent of Amazon for Latin America. So they know a lot about digital. We've been exchanging a lot of ideas, learning a lot from everything they've done. They've basically digitized a retailer in Brazil in a way that's never been done in the world. It's a massive transformation in many fronts and parts of the business. And gladly, not only they've invested on us last December, but they're working very closely with our management team and board to help us become more and more of a .com company, get away from the high-touch business model. And again, COVID has been a blessing from that perspective for us because we speeded up a lot of the efficiency improvements in our business model we were already working on as from last year.
Mm. You both actually raised funding recently, which I think is probably good news for you both, considering COVID has come along to create uncertainty there. Mari, who are your investors, and presume you're not needing to fundraise for a while now?
Yes, on our side, we raised our Series A with one New York family office that own land in Bolivia. They were one of the largest cotton and soybean producers in Bolivia. Bradesco, that is the second largest private bank in Latin America, that came to endorse our entrance in the financial markets, where we are going to distribute together with Bradesco Credit and insurance with Swiss Re our products to help farmers to have more better access, cheaper access to financial products. And also Positivo. Positivo is the largest computer manufacturer in Latin America. They own manufacturing sites in China, in Africa. So for our hardware supply chain, it was very strategic to reduce costs and be able to deploy operations. They took over our installation and maintenance in the field, which allow us to grow faster, like having capillarity and strength in that end.
Mm. We have a question here from the audience about raising money, and I'm sure any advice you can give on that front is always greatly received. But how different is it raising money from domestic investors versus well-known US investors, or just US investors overall?
I think it's very different. So first of all, like in Latin America, you are expected to have more results than in the US. So like in the US, like you have an ecosystem and a maturity regarding technology companies. So I think when you raise from local investors, they expect to see more traction, more organization, more maturity from the team in order to raise. Like you cannot raise in a PowerPoint or in an idea. So that's a challenge. I think there's very few capital willing to do agriculture, and especially hardware related agriculture, like SOLINFTEC and Agrosmart in Latin America. Like SP Ventures is one of the leading, I think is the main AgTech investor in Latin America. And it's like many times they complain how we lack other investors coming to Latin America. It started recently with some cases like SOLINFTEC, ourselves, Strider, having like outside capital into the AgTechs locally. And I think personally, it has been always a challenge, because when we sell the companies to American investors or outside investors, you have to sell first Latin America, then Brazil, then what do you do? So there is a challenge about our economies, our political status, and like the insecurities about doing that. When I think you get more mature, like SOLINFTEC is easier because you already have a many years track record and stability that you can prove. But especially for early stage, there is this process where you need to convince about the region. And many people just don't know like how important Brazil and Latin America are in the agriculture supply chain, especially if they are not specialized VCs. And the ones that are, they say, yeah, that's great, but that's later for me. I want to do Latin America now. So then like you can use the steps like SOLINFTEC to move on to the US and expand into the US so you can access better capital there.
Yeah, I mean, whenever I ask the investment team about our investment in SOLINFTEC, they always say what was really appealing was that SOLINFTEC had that time to test and improve and really work on the technology in their home market. And then for expanding to somewhere like the US and other markets, it was a much easier sell, you know, because they'd worked out all those glitches in the home market. And I think we saw another big investment at the end of last year, which was AgriFi, which is an Argentinian company. And that was after they've been having, you know, a big financial crisis of their own. And two US AgTech investors made their first overseas investment ever into an Argentinian AgTech startup. And I think they saw similar, fundamentals for that fantastic growth across the region.
Absolutely. So just to complement what Mari said, I think it's got to do with maturity of capital markets and financial markets as a whole. You have an excess liquidity historically in the US. Investors are more mature. They can choose more. They can say no to Indonesia, Thailand, Brazil, Bolivia, or whatever, for many reasons. It's also true that many entrepreneurs in the US or in Europe are more prepared to tell their stories. That's also true. So the lack of maturity of financial markets combined with a lack of preparation historically, even though entrepreneurs in Latin America are more resilient, many times have better solutions, more traction, better numbers than many of their peers in the US or Europe, they tend not to tell the story based on what we know has been a reality in Silicon Valley for many decades, which is fake it till you make it. We don't have that chance in Latin America. You need to make it. And then if one day you have to fake it, it will be a small part of your business. You need to deliver, prove yourself first. And that's part of the lack of maturity we've seen. And we go back to the ecosystem question. It was so immature until a few years ago, you had no choice. You fell in the hands of 2 or 3 funds that would really run you over on the terms, and you had to take it. That's not the case anymore because many international funds understood that Brazil is an agricultural powerhouse. We're going to help feed the world together with the US and Argentina. That's a reality that no one can take away from us. And therefore, tech solutions for ag, we will be born in Brazil or in Argentina or in Paraguay because we are big food and feed producers. Same in the US. So there's a huge difference there. But again, I think there's huge opportunity as well because good companies with good solutions will access capital. I'm sure of that.
Got a great question from Emily Abrams. Hi, Emily, out there. Why have some Latin American markets adopted AgTech much more quickly, like Brazil and Argentina, why other countries in the region have lagged behind, like Mexico?
I think it has to do with the type of crops. So extensive crops tend to adopt technology first because they are larger operations and they need efficiency. So that's why Brazil and Argentina have large extensions of sugarcane, soybean, corn, and so on. Why, if you look to Mexico, Peru, Colombia, where we also work very much, they have more like a subsistence profile. Like you have many smallholder farms coming together, producing a high-value crop that is either 100% export and you don't even see the product, or they're just consumed locally. It's like transforming that way of doing agriculture to a more commercial and industrial agriculture takes longer to adopt technologies. So first, like the farmers look for the technology, like Rodrigo said, and I totally agree, it's a myth that they don't do. They look for the technologies. After they do, then the industry, the cooperatives started looking. And if you look to Peru, Mexico, Colombia, they depend on the cooperatives a lot to bring together those smallholder farms and do it. But they already started. It's a blue ocean. There is a lot of need because most of the AgTechs, especially in the US, considering the profile of the US crops, are focused on grains and so on. So there's a lot of opportunities for the high value crops. Now, if you see the blueberries, for example, in California, there is a huge market. And then in Chile and Peru also. And you see a lot of local AgTechs focusing in avocados. I forgot the name in English. What is the avocados is English or Spanish?
Yeah, that is
okay.
English. Yeah, avocado.
Great. I make sure now. So like mainly in blueberries and in avocados, like that's the main focus of the region that started with AgTechs in that area.
So not only there is this market structure difference where you have bigger groups that will pay for solutions and run pilots and understand the technology and have structure and teams to take that risk and understand and pay for it. But we're working, but it's also to do with the maturity of the solutions. If solutions are more and more digital, as in our case, we'll be launching in the coming 3 weeks, the first 100% SaaS solution that will be an app that can be downloaded by any farmer in the United States and increase efficiency by 20-30% using their mobile phones. So that will be a first, will be a game changer for AgTech as a whole. We're working with FAO, for instance, the Food and Agriculture Organization from the United Nations across Latin America, to take very simple solutions that improve the lives and the operations of smallholding farmers. That's a first. But why did we do that? Because the solutions became mature in the past years, and we're able to deliver those solutions in a very costly manner. So it's both a combination of market structure in Brazil and Argentina and Paraguay, but also because the solutions were not mature enough to be delivered in a costly and efficient manner to smallholding farmers.
Mm-hmm. But it's not just farmers who are your clients, right? Mary, you have Coca-Cola as a client. So thinking about some of those other markets, maybe it's the cooperatives that become the client, or it's the corporate buyers that become the client.
Yes, and in many cases, a corporate structure responds to Brazil. So many times, like Brazil is the headquarters for Latin America, and that's also why many times it starts here before than there. So like the Coca-Cola strategies, it's handled here. So once they make the decision here, then they take to the other countries. The same with companies like Syngenta, like in the input companies, in the food companies, pretty much the same. AB InBev, Cargill. So like many of the structures the big decisions are made here and they are replicated. Even though, of course, they can initiate locally, many times they concentrate here. I would say more for South America. For Central America, like Mexico, like Caribbean, then they have a structure there to decide. But I think that influences why it starts here first.
Right.
Louisa, in our case, I call all our clients farmers because I want them to understand, no matter if they're co-ops, food producers, or whatever, we are working to sort out and help the lives of farmers. In the end, they are the link on the supply chain we need to help because they're the ones suffering the most, taking the biggest part of the risk ever since agriculture was invented many millennials ago. So that's the part of the chain that we help and we focus to increase efficiency and improve their lives, no matter what size and what crop they work on.
So I have another question, which is specific to Brazil. Brazil itself has two realities: southern states with smallholders and the Midwest with large farms. How do you adjust your AgTech offering, and is it compatible for both realities?
In our case, yes, it's a different proposition, right? So like we have packages, like different data collection offerings, data intelligence offerings, and we make it modular. For smallholders, we usually access them with a shared economy model, like where we just create a network in a region, and then they can share the sensors, and we generate individual insights. And we link, like Rodrigo said, the corporations, the cooperatives, to help them in that process. So many times in smaller regions, like in Espírito Santo or in Rio Grande do Sul, especially with vegetables and fruits, they are very small, so they need, besides technology, more training. And for many times, us as an AgTech, we cannot hold that responsibility. So we look for someone in their ecosystem, could be the government, could be a cooperative, could be a corporation that's buying from them, to help in the rural extension, like the technical assistance to the farmer, so they can use the technology to support them better. And that's how we have been doing mostly.
We have a similar approach with a few specific differences. We use strategic partners, banks, companies, input suppliers to help us create those communities because one of the biggest challenges, as we've mentioned before, is connectivity. And as we have our own connectivity solution, we try and illuminate with connectivity a big part of a specific farming region. And with that, we deliver the different solutions and packages depending on the specific demand of that geography or that specific crop we're serving, no matter if it's in the Midwest, in Bahia, in the Northeast or the South. That doesn't really change much for us because in the end, the pain for a soybean producer, the biggest cost he has is spraying. So if it's spraying, you need to solve that problem. In sugarcane, it's logistics and harvesting. So you need to sort out that problem. Doesn't matter if he plants 100 hectares or 100,000 hectares. So in the end, we deliver solutions focused for the specific pains we sort out, but we operate to deliver the specific structure depending on the region and crop.
So we're coming to the end, and I've managed to successfully not ask you any questions about COVID-19, but I think it's probably time. Hopefully we could end on a relatively positive note around that. But just to get a sense of what has been the impact of COVID-19 on the agricultural markets of Latin America. I mean, that's a big topic. I guess we could focus on Brazil, but thinking about some of your key crops, what's been some of the big impact, as well as, and Roberto maybe, and Rodrigo maybe pulling on some of your commodities experience in terms of import export. Would love to just hear some of that high level insight.
Well, from our perspective, more like in the field, and then Rodrigo can go to the market side. We see grains farmers very happy with the high dollars and so on. So they made good sales and they have cash right now and they want to make investments. While we have farmers from flowers and vegetables suffering a lot, as we don't have very good structure, logistics, cold chains, and so on to extend shelf life. So that has been a challenge. In the beginning of the COVID, it was a little bit messy with transportation and access of inputs arriving to the field. So some sowing got delayed and this kind of things. But now it's figuring out. But one thing that we are sure across all of them is like the digital transformation became urgent. So it stopped being something that they were doing for differentiation, and so they do later. But now that's the only way they operate, because the dealers they close their doors. Now you can only buy inputs by phone or online. The big input companies like Syngenta, Yara, Bayer, they cannot go to the field anymore. So they don't go. You have also to talk to them online via the e-commerce or WhatsApp. So that's helping us, that we use it to do that already, and being digital already, to be the few ones to be everyone. And that's the main way now that they have to handle, and they have to learn to transfer the trust. That was very much like in the visits and having a coffee with the farmers in the fields and so on, to do it in the phone and online, because there is no other way. So we think it's speeding up. There is a problem with labor for harvesting, especially like with coffee and some other regions, there is not enough employees without the immigration, even internal immigration, because the planes and so on is suspended. So there is some challenges for harvesting, especially coffee and high value crops that farmers will have to handle. So now labor is an issue, where before, if you look to Latin America in general, it's cheaper labor. So people don't invest so fast in robotics and so on, because it's cheap. But now they cannot send them to the fields. And if they do, there's so many compliance about keeping the distance and the face masks and so on, that they are more and more needing the technology to put in the field. So we have seen a sales increase in the SaaS solutions, in the corporate solutions as well, because the corporates are worried on how they can monitor the supply chain, they can adapt. We have seen a temporarily slowdown in the equipment, installations of sensors, networks, and so on, but it's going back now. So in the first month was a little bit, wow, what's happening? Let's wait, because I still don't trust to make larger purchases online, but now it's getting back normal.
That's great to hear.
Well, in our case, I'll separate the answer in two parts. First, internally, it's been a blessing. As I said, we've started efficiency improvement as from September last year, to make the company even better and more profitable than what it's been for a while. And that's helped us serve our clients more efficiently, less costs, revisit big parts of the business model that were, let's say, part of the culture, let's say. So myths I had to put down by now with the help of COVID, showing them that we can be more efficient using less and spending less and investing less. So that's been internally a blessing, and that's taken the company to a whole different new level. So SOLINFTEC pre-COVID is dead. There's a new company that was born, and that's a much better and stronger company, and I'm very glad about that. And about the market, I fully agree with Mari. The difference is we have 82% market share in sugarcane in Brazil, which is the biggest sugarcane producer in the world. We launched last Thursday a campaign to support the sugarcane industry in Brazil, where we offer 5 solutions free of cost until next crop to all our clients, which, as I said, is over 80% of the market. So that's created in the market a demand for efficiency improvement and cost reduction that's speeding up the demand for digital solutions. But again, if you don't serve those clients in a very blunt, objective, and delivering real value, you will lose the opportunity. And we're seeing that from many AgTech companies and many companies across different parts of the economy. Because if you're seeing deliveries from Mercado Libre, from Amazon, and other platforms increasing, as well as from AgTech solutions, you will see a lot of companies run out of business because they're selling smoke. They're not delivering real value. And that's the opportunity, the window of opportunity we have right now in agriculture is immense, but it's immense for companies that do deliver value. So the combination of internal improvements and the increased demand, but for real solutions that do improve efficiency and make agriculture more efficient and sustainable is growing, but people have to be careful not to waste time and money of clients that are already suffering a lot from international low prices. Historically, some of the commodities are in the lowest prices ever.
Mm-hmm. Well, I think we're out of time now, but thank you both so much, and thanks everyone for watching.
Thanks a lot,
Thank you, guys.
Take care. Stay safe.
Bye.
Thanks so much, everyone. Hey, guys, don't go anywhere, though. We've got our next regional spotlight panel starting up right now. It's disruption in food supply chains in the Asia-Pacific region. We've got a great panel lined up. But again, thanks so much to Louisa, Mariana, Rodrigo, and we look forward to the next session.
Thanks a lot, guys. Take care.
Thanks.
Thank you.